Breaking overnight, the Bank of England announced an emergency interest rate cut of 50 basis points. Steve Sedgwick joins us from London. And Steve, what's the reaction there?
Well, I'll tell you what, I've just looked at the FTSE 100 and it's barely up on the day. The key level here is 6,000 and quite frankly, we were way above that at our highs of the session yesterday before we saw this emergency action. The key thing here is it's not just about the rate cut, it's about the stimulus measures below the surface as well. And we've got this terribly clumsy acronym, the TFSME, which is basically term funding for small and medium-sized enterprises. And it is significant, but basically it could free up around about £100 billion for smaller companies who were starved of credit back in 2008. Plus, counter-cyclical buffers for banks are being reduced, which means there's potentially another £190 billion that the banks can lend to small companies as well. But Mark Carney, the outgoing governor of the Bank of England, at pains to draw the differences rather than the comparisons between now and what we saw at the GFC in 2008. Let's listen in.
It is a different form of shock than 2008, and as President Lagarde knows well, and we've had this discussion, and we lived through 2008 in our previous roles, that the financial system was the core of the problem in 2008. It was the core of the problem, and it is in a very much different place where we can draw on the resources of that. There is no reason for this shock to turn into the experience of 2008, a virtual lost decade in a number of economies, if we handle it well.
And Becky, what we're all looking at, of course, is there global coordination? Is the Bank of England working not only with the UK Exchequer, because later on today we're going to hear what the Chancellor of the Exchequer is going to say about stimulus measures, short and long term for the UK economy, but also about the global coordination. I remember being back in 2009 at the G20 meeting here in London. It was President Barack Obama's first big international conference, and he and Gordon Brown, both in April at the G20 and then at September at Pittsburgh G20, which you'll all remember very well, coordinated a global stimulus package. So it's very interesting to hear Mark Carney time and time again today talking about not only coordination with the UK Exchequer, but also coordination, a high degree of coordination, he mentioned, between the central banks around the globe. And of course, that means not only the FOMC, but the BOJ and of course the ECB that he was referring to in that bit of sound we played just now as well. So it looks like this is very targeted, and it's basically telling the banks, do not hang on to the money, do not starve small companies of credit, because that was one of the big problems in 2008 and 2009. And they said that the regulators will be watching very, very hard. They don't want to see bigger bonuses for bankers. They don't want to see bigger dividends for shareholders. What they want to see is this money going straight to those medium-sized companies who are the bedrock of any economy, whether it's UK, US, or indeed global as well. But a big bazooka of stimulus this morning. I'm going to be running 3 miles up the road in a little while as well to hear what Rishi Sunak, as a man who was basically unknown to the world even a couple of weeks ago. He's now the most important finance minister, of course, in Europe, one of them at least, I should say. He's got to deliver a stimulus package, which, let's not forget as well, was supposed to be the post-Brexit, the post-election bazooka for the UK economy. Now, no one even talks about Brexit as the clear and present danger for the UK economy. It's all about coronavirus.